Hello world, and welcome to gold and silver for the 10th of November. I thought I'd better put out a video after that sharp drop. So we need to investigate this a little bit further. So the takeaway from this really is, don't forget that this particular move down through here is corrective. It's bullish corrective. So whatever happens to the rest of this space, it's also part of that corrective pattern. So the market is still bullish. It's just been been sold off. So we need to understand that. So we were looking at the market in a couple of different ways. One of them was a bullish mode, but it was pretty sort of signal from all of this here that we were in a corrective, still in a corrective pattern. So that's just typical of wave fours being complicated. They're never easy. We never really found support on 2000, which was, you know, when we talk about the trade setup, generally at a level, we would be looking for support back on the level. We get out here and we get back in over here when we get support. Sometimes we can get in at lower areas to build in, and we always try to do that. Not always successful, but we always give it a good shot. So where we are now is we've got an A wave sitting here. We've got a B wave sitting here now. Gold tends to work to the 50% more so than the 61.8%. It's just something I've noticed right back since the early 80s. So we're looking for, well, what we could do here is, well, let's just go in and have a look, shall we, on the 4-hour chart and pull this apart. So let me just... We don't need a lot of this. I have squared it up here just with this top here and this top here and brought this trend line down to this point here. You maybe also be able to put the trend line to this point here for this as well, but I always like to start conservatively on the outside. You can also run a little trend line from this top to this top to this top here. It's just something that I've also learnt along the way to help find things. So I know it's after hindsight, but next time it happens, you'll be able to pick that up. So the situation here at the moment is that it would be typical from wave B here for wave C to make a new low below wave A here. Currently it's squared off here. So the thing here would be, it would be possible to, let's just open this up a little bit here. It is possible, we'll just look at all the possibilities. It is possible to put wave C and wave 4 there, but it's a bit of a long shot. Okay, so we're going to dull that out here, but we're also going to discuss it a little bit further as well. But it's a bit of a long shot. First of all, we do have 5 waves in this move down through here. We'll only be able to see that on the tick chart, so we will go to the tick chart a little bit later on in the video. But in the meantime, we are looking for the 50 and the 61.8% retracement level. So remember, we're looking more for the 50 rather than the 61.8%, but we could also gravitate to the closest largest number of the 19 here and look at that as well. So we could put wave 1 here, wave 2 here. We would be looking for an A, B and C wave here, and then down for the 3rd wave, 4th wave and 5th wave looking down here. So I'll just pull these over into this space here for the time being and we can look at that. We'll also need to copy this here, an A and a B and a C wave here for wave B. Now, if this is wave 4 here, right, and this is the 50-60% retracement level, I've got it going up in 3 waves. So there's a couple of things here we could do to understand if we were bullish. So one of the first things is that Well, if we see a move above the 61.8% mark, then we could go long from that point. So then we could also use the trading level. So we know this is the closest largest number, and then we've got sub-levels here, 1, 2, and 3, 10, 20, and 30. So if we found a classic trading levels pattern sitting on top of that, top of group 1 there, the 1930, and we'd be looking for a pattern like this. So if this was the 1930 here, we would see the arrival, the reaction, the first high above the level, and then this, then the correction, then the support. Bit of a process, but that's how you work out if it's a tested support. You can also use the volume as well. That's always very helpful, but you just need it visually to see it sitting on that level, and that will send you long at that particular point in time. Of course, you can go long anywhere. You can do whatever you want as long as you know what you're doing. So it's very clear that there's a 5-wave structure down through here. So we should see a rally in this space here. Will it just be? I've gone to the extremes here in this case, but it could certainly just be to this level, back into this level here, and a push up into the 1900, and then down from that point. So you could also draw a line across here and go short on the low of 1 and B here, and go short at that point there as well. You may be able to get another classic trading levels pattern on the short side here as well. So the thing that we're working out here is, do we have wave C or form we're completed here? Don't know about that, bit of a long shot, but otherwise we've got 5 waves here in the opposite direction of the trend. So that means that we're likely to see wave 2 here and wave 3 to go down. We're in wave 4, so it could even get more complicated than this. I think one of the main takeaways from all of this is, what we're trying to find at the end of the day with all of this is not to lose money in wave 4s. Always remember that. They're not the best things to trade. Okay, for little scalping sort of short-term trends and so on. But what we're really trying to find in all of this mess is we're trying to find the low of that wave 4. Now, it may be that we have a 5-wave structure down at this point here. Secondly, this whole thing just may travel further sideways and get more complicated. So we may just end up having this wave 1 as an A wave here, back for the B wave and down for the C wave here, and then have another ABC here. So getting into a really sort of ugly triangle pattern at that point. So that's also possible as well. So eyes open if you're trading. If you're not trading, then and we get 5 waves down here, well, then we know what we've got at that point, and we can work it up from that point. Let's just go into the 1-hour chart and just get a bit more clarity on this. So all your indicate when you're at previous lows like this, if you're at previous highs, you'll be in the overbought, and down at your previous lows, all your indicators will be showing you that that's the buying opportunity. But yeah, still, anyway, once you know how indicators are calculated, then you don't really need them. Yeah, as far as I can see here, we'll be going up for an ABC. If you want to short this, then you'll take this, many ways to do it, of course, but take that low there, and we want that wave B low, wherever that comes in here. It'll be quite obvious at the time. I've probably made this a little bit too big, but finding that second low is what you're really looking for. This is also group 2 here. So we're working with 1900. We've got group 2 below, 65, 72, and 80. And then above that of the 1900, we got 10, 20, and 30. If we get support on 30, well, then it's long from that point, okay? Otherwise, we will be looking, so we'll put that just up there, because going long here will take us a long way up at that point. And then we can look to add above the 2000 and so on. But otherwise, we have to wait for the 5 waves down. It's worthwhile, if you're a trader, to short the 3rd wave. But otherwise, we'll wait for, you can short the 3rd wave and just go 1, 2, 3, 4, 5 when we get down here, and then we'll look, once that's finished, then we'll look for the closest largest number, probably the 18, maybe the 1750, and we'll look to build in, and we'll build a whole lot of long trades through here. And in the bigger picture, we'll be going up to 2000. 2,200 or 2,300, somewhere up in that space for this wave 4 here for wave 5 up there, and we're looking for 5 minor waves, minute waves up there. So that's it. I'll just go to the tick chart just so we can drill into this little space here. Let's go back a week. Maybe that's enough, yeah. So I was looking at this as wave 1 and 2 here, and then all the way down for wave 3, 4 here, and then down for wave 5 at this point here. This wave 4 could also sit over here as well, but that's here nor there at the moment. The market's bouncing off the midpoint here, so between 1800, which is a minor level, so I can just darken that up a little bit, give it a bit of, I mean, it's just an important number. So between 800, between that 100 points here, we break the problem down into parts, into 3 parts. Group 1 is 1, 2, and 3, 10, 20, and 30 is group 1. Then the midpoint here, 5 being the second strongest number, and then group 2, 65, 72, and 80. It is good to, if you're working at this level and, you know, you're using indicators and all those sort of things, which is okay. It's also quite handy to have the levels in there. You just put them really lightly in the background, and then you can see the market working through them. And then once you understand the patterns that occur at the levels, the classic trading levels patterns, there's only sort of 3 of them, then you can start to look at how to go long and how to go short and those sorts of things. You'll know what tested support is and so on. And then also too, what the trading levels do is they bring your attention to the price over here, because it's where the volume is executed, and the whole market is about price and volume, and the 3,000 indicators that you get are all based off those 2 things. So or pretty much so anyway. So yeah, it's just good to work with the raw data. But anyway, as you know, we're looking for a move up into this space from these current lows here. Once this B wave is in, now the wave 2, if this is a wave 2, it should be a simple zigzag correction. So 5 waves. That will probably take us up to here, the B wave in 3 waves, and the C wave here taking us into 5 waves. So a 5, 3, 5 structure. If we don't get that, well, then we know we're working with something else. And also too, if we get 5 waves from the low here to here, then we know that that wave 4 that we were looking at over here before is in place. Okay, let's have a little look at silver. I'm obviously doing the same thing, so I don't need to do too much about that. So yeah, we could be back at the $20 mark. This is a CFD contract here, that's why it's at 2,000. So I mean, I think it's good to look at the S&P if that's okay as well. I might just have a look at this. So anyway, we're looking at 5 waves. So this here, that's about 40%, that's about 60%. So we're probably in the middle of it there. So we'll be looking for something like this in this case. So you can also short it through there on the low of 1 and B if you can recognize it. But because we're looking at 5 waves down in these markets, then just find the S&P 500 here. I mean, it's kind of interesting really in the fact that, let's go to the 4-hour chart here. See, the S&P 500, sometimes gold's been following it, and sometimes it's been, and now it's doing the complete opposite. So in this market, we've got up for wave 1 and we're going back for wave 2, and then we're going up for wave 3 and 4, 5. So while this is pulling back for wave 2 here, then the gold and silver is doing a wave 2, but in the opposite direction. So it may be a good idea, now that we know that they're working in complete opposite, is to keep an eye on the S&P 500, because we update that every day, of course, a few times a day. So yeah, anyway, just thought I'd throw that in, and I'll leave it at that. So thanks for tuning in. Cheers.